This thing, right?
I think it's kind of what I was going for. a bunch of real estate, insurance, and mortgage pirates. Well, we survived the storms.
Ooh.
Adam's phone is melting over here, so we're going to try to make this one relatively quick. Tony, you had a video yesterday, again, urging, I guess, consumers and real estate agents to get involved with Fannie Mae and Freddie Mac condo changes.
Freddie Mac Bulletin 2026-C. I have it inscribed on my brain.
Charlie.
Oh, you got a tattoo on that too? Because I got the Fannie Mae lender letter 2026-03 on the right arm and a heart.
Yeah, exactly.
Good stuff. Well, actually, not maybe so great stuff. So, why is it important? Well, these letters came out March 18th of this year. Said Fannie and Freddie are changing how they're going to handle condos and in the review of condos for lenders. One of the changes just went into effect the first week of August here, which is removing the thing called limited review, which is on our side of the fence. Hey, I want to buy a condo. Okay, great. Are you putting at least 10% down on this is going to be owner occupied and or a couple other little things in the matrix that we don't have to go super into detail? All right, that allows the lender to ignore or not have to review a few of the critical portions of the condo association financials. The budget primarily. That's gone. Bye-bye. No more put 10% down and ignore the problem. Next thing that they've changed in the good of the positive is they now have a small association waiver of review. So if your condo association is 10 units or less, exempt from review.
Okay.
It cannot be part of an umbrella association though. So some positives there. And then on to the negatives, I suppose. So generally for the, I would say since like 2018, maybe 19, Fannie and Freddie have had this guideline for your condo association that said that 10% of your association dues or your revenue has to be allocated towards a reserve account for capital improvements and maintenance. Well, what do we know since 2018? Cost of construction's gone up exceptionally high.
Cost of insurance has gone way up.
Material costs have gone up. Everything has become more expensive.
Realtor fee has stayed the same.
Weird.
Realtors have not received a raise in a long time.
I would say that's incorrect.
Well, he's
Property,
based off
All right, we'll argue that one all day. I'll tell you who hasn't gotten a raise: appraisers. But they'll be extinct after this new form comes out, the UAD 3.6 anyways.
Oh, God, that even sounds cruel.
I know. We'll talk about that. We'll talk about that one in November.
Sounds like a pill you take.
World War II.
Okay, so what's the deal?
The deal is, so this 10% number, right, is now going to be 15%.
All right.
So
you got to pay to have them look the other way.
Yeah.
Essentially, you have to budget for it. One of the things that we're seeing that I've been seeing is that a lot of associations will end up putting more than 15% towards their reserves. Okay, it'll show up on their actual P&L. However, their budget is showing 10%, and they're like, "Well, we are." Well, it doesn't matter. It has to be both. You have to be putting it towards the reserves, and you have to have it shown on the budget. Right?
Wow.
Why is this happening? Well, one of the big things that's happening, we just talked about this before we jumped on, scheduled roof replacement.
Yes.
So these condo associations, right, generally or historically have had replacement costs for roofs, which, Adam, you can maybe talk a little bit about.
Yeah, so you think about it, it's all affordability. So now that these storms are coming every week and there's going to be a storm claim on your association, one way to reduce the premiums is to remove coverage and or increase your deductible. So they're saying, all right, my premium was $50,000 a year. Now it's $80,000. But if you come and say, I want to do replacement costs, take that away on my house. Now it's ACV. We can keep it at $50,000. So they're like jumping on it, right? Well, what's the consequence of that? Now you have a $100,000 roof that you might only get $50,000 for. You still need a new roof, right? So you just cost yourself $50,000 in cash instead of financing it through premium. So that's what's happening.
So long story, like the difference there is the premium goes up $30,000 a year. That $30,000 could be spread across all of the members of the association.
Yeah, via the monthly assessment, right?
Yep.
So one thing that people are going out, and stop me if it's a tangent, but another strategy that could work, we talked about it before we started. There is this thing in condo policies that says loss assessment coverage. It is meant for insurance claims against the association, in which now a special assessment has to be divvied out to every unit owner to cover a deductible or to cover damage that the insurance policy didn't cover. So one strategy some associations are going with is having every unit owner increase that limit, which is usually $1,000 stock, to $20,000. It's about $25 a year to do that. And now they can actually have a $200,000 deductible on their association. Now their premiums come down, but when something happens, it gets spread out to all the insurance companies underneath. It's almost like reinsurance.
And there's those little things like that that don't cost much that make a huge difference that are so important to have.
Yeah.
What happens? Can you talk briefly about what warrantability is? Because I've had a lot of people, actually, we had one association say, we told them that this was a Fannie Mae, Freddie Mac issue. It affected all conventional loans. And the people at the association said, well, have them get their loan from a different bank. We're seeing this quite a bit.
I mean, that does not surprise me. We see it all the time about when we ask the association. We've never been asked for this before. Well, the rules just changed 2 weeks ago. So yeah, warrantability is a Fannie Mae and a Freddie Mac thing. What it does is says that the GSEs, Fannie Mae, Freddie Mac, are confident in the association's financials, which allows us to extend GSE subsidized mortgage rates and fees to the buyers.
Hold on. In layman's terms, though, what is Fannie Mae and Freddie Mac? They're not a bank. Would you explain to the people that they basically are the mortgage market?
Yeah, they are they're not the bank. They're the bank's bank, if you will. So that's where we go to recapitalize, right? We close that loan. We'll lend you $300,000, and then we will securitize that $300,000 with Fannie Mae or Freddie Mac to get that $300,000 back so that we can lend it out again.
Right. And that is what actually holds our rates as low as they are. Even if you don't like the rates today, they would be much higher if Fannie Mae and Freddie Mac didn't exist. So what I try to get across to people is going to another bank. One, you'd have a very difficult time finding somebody that's not going to the secondary market of Fannie Mae and Freddie Mac. Two, if you did, rates and fees would have to be significantly higher. Right?
Yes.
So the concept of just go to a different bank, get that out of your mind. And then the other thing that I like to inform people is if you're not warrantable conventionally, you sure as heck aren't going to be warrantable for FHA or VA funding. All right. So don't think that that's an option. This is a serious issue. And if you do not maintain your warrantability, your asset value will likely drop like a stone because now you're limited to only cash purchases in this association. Yeah. In Indiana, one of the things they like to do a lot is put a restriction on rentals. All right. Something like 95% of the associations in Indiana have a rental restriction. Well, if you can't rent the property and now you got to buy it in cash, all of the properties just very quickly went to the highest amount of cash that a person who'd be willing to live in one of those properties should have on hand.
Tony, you said something before we started, and people I don't think they realize it, but you said something about the value of the condo is equal to, or is
there is a direct correlation between the value of your asset, your property, and the financial strength and health of your association.
Full stop. People don't realize that. They fall in love with these condos, and then they're like, they get in there and they're like, oh my God, we have no reserves. Oh my God, what if the elevator breaks? Like it's bad.
Bad. You've owned a condo before. You've owned condos before. I've been a condo before. It is being on the board is more important, or being involved in that process is more important now than ever.
Yeah.
I'm sure you guys have lots of master policies. You're dealing with these large management companies. Tony, I know that you're chirping at large management companies for gatekeeping super important documents and preventing ease of transaction or making informed decisions before you even write an offer. Like, it's created a massive inefficiency.
Yeah.
But like to Adam's point earlier, there's something that might cost $25 a year that could fix a large chunk of problems, but instead of looking at it from a broad view, we're looking at it going, oh my God, our association dues might go up $8 a year.
And people are going to have to get engaged. One of the things that I've learned is usually the people on the association board are just the guy who is willing to do it.
Correct.
So don't assume that because they're on, like, people assume the government's smarter. These are just regular people. Same thing with HOA boards. Like, it's just a regular guy. Don't assume that they know better. Don't assume that your property management company knows better. There's been numerous consumer groups now that have gotten together, and trade organizations that are trying to push this back because they see what it can do. I mean, it's been long enough now where I can talk about it. I was hired by several banks during the recession to evaluate their portfolios for impending loss. All right. And I did a condo association in Homewood, which at the time, average Americans had lost about 30% in their value of their property. All right. This association had lost its warrantability and had in place the no rentals allowed. All right. 90% depreciation in about 60 to 90 days. All right. The rate, if this happens to your association, your rate of strategic default will spike by like 1,000%.
Yeah.
Strategic default, which is when somebody just walks away from their mortgage. All right. That goes through the roof, and it goes through the roof very quickly as people find out the association is non-warrantable, insolvent, has lost its master insurance policy, whatever it is. Right. So it's really important that people get to this.
That's also, so great thing you brought up regarding warrantability. So another portion of this warrantability, or this questionnaire that a lender sends out, one of the questions on there is how many unit holders are 60 days more or more delinquent in HOA dues. So if you're going to go belly up on the mortgage, chances are you're going belly up on your HOA dues as well.
They stop paying the HOA dues first is the life cycle of default, right? HOA dues is the first thing that people stop paying. Or they quit paying those for a while, and then after a while they just quit paying the mortgage. Then they're out of there.
Yeah. So that is, again, why do lenders care about the warrantability, or why do we care about the financials and all of that? Just because we want to make sure that we're lending on an asset that's valuable and protecting you. Like this, all of this stuff sounds like it's scary and it's negative and it's there to harm the consumer. No, it's there to protect the consumer. The problem that we're running into is these HOA management companies, they honestly just don't give a flying rat's ass about the.
Well, it's not like the government just makes this up. Like, it's come from something that's going on. Like, it's come from an endemic thing there's a problem out there.
Well,
and now we have to make a rule to stop the people from being hurt.
It stemmed from Florida.
Florida's bad.
So you have a condo building collapse in Florida. Florida then decides to legislate, and now Florida, if your condo unit, I want to say, don't quote me on this, if it's more than 8 stories high, has to go through a full-scale inspection with structural engineers and everybody else. And then they say, you have to reserve for these components at this type of replacement schedule.
Yeah.
The state is legislating that because
people die.
Yeah, loss of life. Like because we don't maintain.
Well,
and
that's
also,
an extreme case. Florida's also running into insurance premiums that are just wild. Just like stopping the gears of the real estate industry because people can't afford that.
Well, and if you can too, if you're a realtor watching this, or if you know some, encourage the associations to engage on this. I've pushed for some movement in Illinois and in Indiana. So Illinois is the 4th largest realtors association in the United States. Looks like we may have some movement there. Northwest Indiana is working on. What I mean by movement is 1, outreach to these management companies and associations, but 2, to their memberships to require that they obtain this documentation and possess it prior to being able to list a property in the MLS.
Yeah.
Now, if that occurs, a lot of this can change immediately, because if you sitting at home, you're told by every agent that comes to you, I need this before I can list it, you're going to be able to obtain it. You're not going to run into the problems that we're at right now, which is 1, holding back information, not able to obtain it, and then finding out at the 11th hour that association has some problems.
Yeah.
All right.
You guys have owned condos, right? If you own a condo, you are entitled to the annual budget.
Yep.
You are entitled to the meeting minutes.
Yeah.
You are entitled to proof of the master policy of insurance. Is there anything else I'm missing?
No, but that's a funny one because you're technically not entitled to the declarations and bylaws
For real.
and rules and regs. They'll give it to you once. However, the financials you can. So they can make it contingent upon payment. Okay.
Okay.
For the rules and regs. They can't with the financials.
Yeah,
All
that's
right.
gotta be open.
And this is a fight I face all of the time. And since I lost the title of broker owner or managing broker or whatever of a big office, it seems like I'm like relegated as just some other realtor.
Just the guy.
It's not effective. They don't listen to me. But I constantly try to tell people, title companies and management companies, like, no, they owe you this. Like we're the one that we're doing right now. I found out as I'm doing some digging, they do the P&L monthly. And they're like, yeah, the management company's like, yeah, you can have it. We don't care.
Yeah.
I'm like, oh, just all you guys had to do was ask. All right. So anyways, we're going to need some education on this. And everybody with association, get those documents, see what you're budgeting. Then the other thing is too, where mortgage companies have a hiccup is I can't believe how much of this I see that the P&L will refer to reserves as like savings or something. And the budget refers to it as reserves. Your verbiage needs to match. And the problem that we have here is we talk to the management company and they will tell us, well, the homeowners aren't going to vote on that change. But it's like the management company is the one that's advising you and putting this together. You were the one that created the vocabulary. All right. So you guys need to get on the same page. Make sure these things look clean. If you're putting it, a lot of them are putting the money towards it already. Just change the 2027 budget. Don't wait on this. Well, we can't do it because everybody's got to vote on it. And that's not till 2027. This is important enough to get a special vote today.
Tony, you're right too. If they start making that a requirement to list, it will fix it immediately.
Immediately. You have every Tom, Dick, and Sally owns one going off on their hey, I can't sell my place.
Get it done.
Whereas right now it's just some bothersome realtor or some bothersome mortgage company that they try to tell you. What do they try to tell you? No other mortgage companies ask for this. Wait, every single one asks for this. Yeah. What are you talking about?
Oh, but by the way, for $800, we can get it to you in 3 weeks. Like that's
dude. I paid for that one time. I got suckered. Yeah. I'm like, expedite it.
Yeah,
give me the information.
Yeah, we'll just download it and send it, but for $800. But that's
again a new business for me. Instead of 8 weeks, I get it to you in 7.5.
Perfect. That's worth it.
That's value add.
This show makes me come up with so many better ideas for businesses than selling your house.
There we go. But the as we go through this, the important part about voting on budget and being involved here, right? We're coming into the fourth quarter. This is when your association is going to be putting together the 2027 budget. So you could be making a decision October, November, December of this year that impacts the saleability or the value of your home in 2027.
Yeah.
That's why it matters. I hope to God that the Illinois MLS listens, NYRA, Indiana MLS, the boards, Main Street and all these other.
Main Street and NYRA are really the two controlling ones of this whole region. So, if they put this in place, it's a Northern Indiana Realtors Association. Main Street is the Main Street Organization of Realtors. They're out of Downers Grove. I believe they have approximately 28 or 30,000 members. So they basically cover all of Chicagoland, almost to like Iowa. If we can, as consumers, get those two organizations to force realtors to possess this information before they list a house, it will clean up a lot of problems. It'll help your associations, your management companies, everything.
Makes transactions go easier. And then as far as associations, for those of you that are in charge of your association or involved on the board, Adam, your group, you guys do master insurance policies all the time. You're obviously well-versed in this. We have 6 pages of documents to go over. We talk all the time. It's really important. I mean, and the landscape for insurance and associations is getting hairy. So, they don't want to be on the hook for $50 million development at certain insurance companies. So it's really important you shop around for sure. Educated agent, one that spends 30 minutes every Wednesday with the mortgage guy to talk through it always helps. Tony, if people have condos, they want to list them, they want to sell them, they want their values on them, they want to buy them. 708-259-3734. Google me, whatever, but phone is great. If you own a condo or you're in charge of a management association, Adam at adamismyagent.com. If you guys have other questions about mortgages on condos, happy to help you. Apply with jr.com. until next week. But I think we're talking about solar panels next week.
I'm done. Cut the show.